Well, hello, everyone. This is Bruce at Fleet Capital Management. It is Friday afternoon, just a little bit before 4 p.m. on the West Coast, and it is August 12th, 2022. We're going to take a look at the market. We had a really interesting and good week. We'll take a look at the market, take a look at a couple of our defined outcome ETFs, and show you a couple of little changes that are happening with my allocation that will affect Group 1. Not really Group 2, but we'll take a look at all of that. This should not take a long time. We always need to look at our disclaimer, which is the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell a security. Feel free to subscribe to the YouTube channel, which is where we host all of these. If you have any questions, email me always at bruce@fleetcapitalmanagement.com. And we will go from there. Don't forget that you can always go to our homepage and click weekly market analysis video, and that will show you the most recent and also a list of previous. They're all there. They're all archived. So if you ever want to go back to a certain topic or a certain spot to see what I had said about the market, you're welcome to do that. If you ever want to schedule a video call with me, a Zoom call with me, I'm always available and always happy to do that. Just click on that button. So before we go to the charts, let's take a look at a couple of our defined outcome ETFs. This one is NAPR, and I'm going to show you two that happen to be the largest holdings. We have lots of them, but these are the largest, and they're pretty reflective of all the rest. Just remember that when you're in this gray area, you are completely buffered. So if maturity was today, you get your money back. This darker line is the investment itself. The lighter line is the index. This one, N, means we're looking at the NASDAQ or the QQQ. That's really the same thing. And you can see that at the bottom in June, and this is about where I called the bottom of the market, we were always within that buffer zone. We were always within that buffer zone. So even though we were down about 15%, it just didn't matter, because if the security matured, we get our money back. So that's why I was never really stressed about this. And you can see that we've had a nice steady rise since June, the market bottom. And we're getting close to breaking above out of this gray area. We'll be there soon. And then we will be in the profit area, which I'm going to talk about in just a second. So as of this afternoon, with the market close, that investment is down 4.08%. The NASDAQ, which is what it's based on, is down 8.85%. So nicely outperforming the NASDAQ, even on the downside. But once we cross above those little dots and we're back in the profit area, we have a cap of a little over 13%. Let's call it 13.5%. So that's as much as we can make on this investment between now and its maturity date. And because APR, April, we know that this will mature on March 31st of next year. So I don't know what date it will start to approach this. I'm kind of guessing it might be prior to the end of this year. But as it gets within 1%, I get a notification. This is all automated that I've set up, and we will liquidate this security. For Group 1, the change is we're not going to rebuy a defined outcome ETF. For Group 2, we will probably roll over, we'll capture as much gain as we can, and then we'll roll over into a new defined outcome ETF. But remember, Group 1 is mainly looking for returns. Group 2 is looking for a little bit more protection. So I'm going to, now that we've come out of this bear market, and I truly believe that that is the case, Group 1 will probably not own any defined outcome ETFs, but I do have to wait until, at least I have to wait until we are in a positive area. I would never sell when we're in a negative area, because that's just giving away money. Okay, so I hope that makes sense. That's that one. That's the NASDAQ. Here's the S&P. This is BAPR. Same thing, you can see. Now on this one, we went a little bit below our buffer zone, but not much. We are clearly rising back up and approaching the top side of the buffer zone. You can see that we are down as of today 3.5%. That means we're down 3.5% since the day we purchased it. And the S&P, or the SPY, is down 5.5%. Our cap is in that 5.5. It's about 15.5, 16%. Let's call it 16%. So the most we can make on this investment is about 16%. I don't know when we will get there, but once again, when we're within about 1% of this, I have it scheduled to where it will notify me. And group one, we're going to capture the gain and not roll over to another defined outcome ETF. Group two, we're going to capture the same gain and probably roll over to another defined outcome ETF. And the reason for the difference, like I said, is group one's looking for higher rates of return. Group two is looking for a lot more protection. These have great protection. You've now lived through it. You see how it works, and they've done a great job. Okay, let's go to some charts. Here is Go No Go Pro charts, and I have 3 panels. The only one you need to focus on is the center panel, because that's a daily chart of the S&P 500. Each one of these bars is 1 day. And I'll just let you know that this panel is my 60-minute chart. So each line is 60 minutes. And this one is my 30-minute chart. So each line is 30 minutes. And I'm going to come back to this in the center. But for a lot of my options trades, I use 60-minute charts to get in and 30-minute charts to get out. In my longer term options trades, which I just completed the first one for my options traders, I'll show you that in a minute. I actually use the daily chart to get in. Right where this crossed, this ADX crossed this DMI line, is when I bought the option, and then I use certain targets to get out of it. So focusing on this, and this is the S&P 500, you can clearly see we had this massive down run, which we all hated for the first half of the year. And then in about mid-June, it looked like we had found a bottom, and we have rallied from that bottom. So the good news is, you know, our moving averages look good, and we're going to look at our ATR dots in a minute. Blue is the strongest of the uptrend. This aqua is a weak uptrend, then it switched to blue. So that all looks good. Not a problem at all. If we go over to this chart, which is the same S&P 500 on a daily chart, same thing. It just has different indicators. So we remember we were in a downtrend when price was below these 2 darker dots, if you will. And then we went into dark light, which is what I call a no trade zone. And then right here, if you can see, we went into a light, which is a buy signal for ATR. And at the same exact time, our green line, which is the 20-day moving average, crossed above the gold line, which is the 50-day moving average. That's more confirmation. And on that day, which is August 4th, I started to buy securities for different accounts. And I did it because of these marks. And then I said, remember, we're still below the 200-day moving average. And you can see for about a week, we just stayed under that 200-day moving average. And then on Wednesday, we got our first close above the 200-day moving average. This was Thursday, and then today it's much higher. So we're bullish. I like what I'm seeing. There's only one last technical indicator that really needs to happen, technically speaking, is when the 50, that's this gold line, crosses below the 200, that's called a death cross. In technical analysis, that's the definition of a bear market. There are multiple definitions of a bear market. Another one is 20% decline from the high. But in the technical world, which is pretty much where I live, when the 50-day crosses below the 200-day, it's called a bear cross. When the 50-day crosses back above the 200-day, that's called a golden cross. That's the very last thing we need to be in bull market, no matter what definition you're looking at. But you can already see, I don't generally wait for that. I've got everything else in our favor, and so I'm pretty happy building in more securities, which we've been doing. So let me give you good news, bad news. Remember when I talk about Fibonacci retracement, the market goes down and then it usually retraces about 50% of what it went down, and then it could go down again, and the reverse happens on up. Well, right now, if I take January 1st, which is back even further, let's go back here. Here's where everything started to fall apart. This is January 5th. So if I go from there all the way down to the June low, which happened here, and then I put Fibonacci on it, we're at about a 50% retracement. Now, in a downtrending market, it would be normal to go to the 50% retracement and then continue down. I don't think we're in a downtrending market anymore. So we may continue to go sideways a little bit because, again, all these things are psychological and we have to break through them. But I think we have enough momentum that I'm not going to worry about it. But it may be something that causes the market to bounce sideways for a few days. Not a big deal. That's normal. But I really think that this was our bottom and we are moving to higher highs. And I would not be surprised at all whatsoever if by year end we are significantly higher. Actually, I should say we are higher than when this bear market started in January 1st. So we'll just have to see how that works out. But I do think we have a lot of upside to go. Couple things while I'm here. So I showed you that on Wednesday, the S&P 500 broke above its closed above its 200-day moving average. That was great. If I go to the NASDAQ didn't close until today above its 200-day. So that even gives me more reason. And you may have noticed that I bought some QQQ securities for accounts today. And there's a reason behind everything. And that's because I knew it was going to close above the 200-day. So things are looking good. You know, we've looked at ARC a few times because that was an investment that made us a lot of money once. And look at this. We've been in this no trade. This is what I call a no trade zone for the system that I built. So we have light dots on the bottom, dark on the top, and it's a no trade zone. We don't do anything. And look at how this stock has gone or ETF has gone sideways. And this is since June 24th. So this is a long time. So these indicators help me to avoid buying when we're in. See how it went right up to the top of this no trade zone, came back down. It's trying to go up until it breaks to the upside. I'm not a buyer. But things do look good. We're really close, and we may be adding this to some of our portfolios. Let me go over here and show you a couple quick things, and then we'll wrap up. If I go to our trend analysis page, you can see that, again, this is updated through today. We are clearly in an uptrend. And if you remember, the ADX doesn't point to trend direction, but rather trend strength. And we really want to get above 22.5. That's the mark that I use. Some people use 25, meaning you want that ADX to get above 25. Well, we're above it. So this is showing, we know we're in an uptrend because we've got all ups, and this is showing strength of trend. If I were to see this number to start to come back down, then I would get a first inkling that the trend might be weakening. But right now, I don't have any of that. Everything is looking good. If I go to ETFs, I track, like I said, I've got a number of different systems that I use, and I track every single security every single day. And at the close of business each day, if the security has a gain for us from the buy price, from the date we purchased it, I color it green. If this, like SKYY, I bought this today actually, if this was a little bit below our purchase price, I would have it red. And the reason I do that is so that my eyes immediately go to things that may be going against us. And then what I do is I notice what type of stop I need to use. And on this one, I'm using a 2% trail if it closes below the tight ATR line. So remember the ATR line, and I can go over here. Let me go to our active positions. Here is XLK. Here's an investment that I have for a number of clients. And if it were to close below that tightest, the highest ATR dot, I would put on a 2% trailing stop. So if it went down 2% more, we would be stopped out. But hopefully the next day it would go back up. I would take the stop off and we could continue to rise. Because you can see in a down market, it generally stays below that tight ATR line. And if I go back to an up bull market, it normally stays above the lightest ATR dots. So that's all that means. I just closed one of our long, I'm now using both a short-term option and a long-term option. Long-term is relative. My short-term is 7 days. My long-term is 21 to 25 days to expiration. That's what DTE stands for. Don't worry about this first line. That was a trade I made from my personal account. This is a trade on August 2nd. That I made in client accounts, and this color, whatever, I'm a little bit colorblind, but it's pink or I think it's pink, stands for FCM, okay? And the lighter color stands for my personal account, which is at a company called Tastyworks. That's why it says TW. But in any event, this was the first longer term option on SPX, which is the SP 500 that I purchased. And the only numbers that are going to really make any difference to you are over here. We closed it today, as a matter of fact, and we had a 27.4% gain. And we did that in 10 days. So I track every single security. I know where we're going to stop out of every single security. The reason we went into that, if you're curious, is if we go back to the S&P, actually I'm gonna go over here, S&P 500, do you see where this ADX line was below the 20 level? There's 20, and it crossed right here above what's called the negative DMI line. Right there on that cross, right after, that's where I bought that option. So I use these technical tools to give me clear buy and sell signals. For my short-term 7-day, the next cross I get like this, I will probably buy another 7-day, but those are different systems. So each system gets tracked separately. Again, here's bullish ETFs. We don't have any leveraged ETFs right now. And anything that has a color, which can be either green or red, means that the security is closed. We're already done with that. Let's see, I showed you trend analysis. There is another stock system that I'm working on. There's 2 more stock systems that I'm working on for primarily group 1, but group 2 will get some of those. This one, excuse me, let me go here. This one, this is a system I have, which is based purely on momentum. These are in my account. I bought these 2 securities on the 11th, which is yesterday. And I can tell you one of them's up like 6.5%. The other one's up about 2%. I have very complex stop management and profit target management in there. I'm going to start buying these in group 1. These are powerful trades. And then I have another system for a little bit more conservative trades that I'll do in group 1, and I'll also do those in group 2. I just haven't gotten any signals yet. I'm trying to really pinpoint our entries so that we have a much, much higher win rate. Like I mentioned in a couple of my emails, we've got a pretty awesome win rate right now, but I'm trying to get even a better win rate. And I'm trying to reduce our drawdown or our loss when a security goes against us, and that will happen. That is the nature of investments. But on another video, I'll go through these complex. They're called bracket orders, and I'll show you more of this. But for today, I just want to show you all of the systems are working. Some of them are in final testing, and I'll be rolling them out to clients. The ones that I've already rolled out to clients are working, and they're working like a charm. So everything looks good to me. Now, with all that good news, let's go back to reality. Could the market go back down? Yes, a market can do any darn thing it wants. And in an uptrend, will the market go down? Yes. If you pretend that this is a pure bull trend, we had 3 down days right there. So in an uptrend, markets do go down. In a downtrend, markets do go up. So now we've switched. We've switched from this year of being in a downtrend to what looks like a bull trend. And we will be looking for opportunities more and more to find bullish trades. But we're just not throwing, the stuff against the wall. We're using this analysis. We're using these systems that I've created to pinpoint when we should be buying. And what that means is we're looking for the highest probability. If I go back to that options trade for a second, I even mark this, let's see, right here. This is called a P50. P50 means 50% of the maximum profit target. What is the percentage chance that this security is going to get at least to that level? When I bought the security, there was a 75% chance. So we're buying on probabilities. That also means that there's a 25% chance that we could be wrong. That's why I have stops highlighted, so my eyes go directly there. And we're going to keep those losses as small as we can. But my point is we're using probability analysis and technical analysis, and I think things are going to be very good for us going forward. So that's a story. Don't want to take too much of your time. Everything seems to be bullish right now. And hopefully it stays that way for quite some time. And we are adding more and more and more securities to our portfolios. Group 1, I'm going to be adding a lot more individual stocks to our portfolio. And like I said, when a couple of our defined outcome ETFs get nice and profitable, we're going to liquidate those, capture the profit. And for group 1, we're not going to go back into those because I'm trying to make room in the portfolio for more and more ETF stocks and options, because those are the things that are making us the most money. And we have ground to make up. So I want to use those things that have the highest probability of making us the most money as long as this market is still in a bull trend. And we will ride this trend for as long as it goes. And hopefully we've got a couple of years before we see another downtrend like we saw. So that's a story. Please give me a call or an email if you have any questions. Always feel free. I know I say this a lot, but always feel free to click the button and hop on my schedule, and we can look at your account specifically if you have questions, and we will go from there. Things are looking good, and let's keep our fingers crossed. Have a wonderful weekend, and I will be back with you early Monday morning. Talk to you then. Bye-bye.